Trump's tariff turmoil, a roller coaster ride for U.S. markets and political fury. The U.S. stock market experienced another day of decline on Thursday, a stark contrast to the celebratory rally following President Trump's unexpected tariff retreat on Wednesday. This sell-off isn't just about economic indicators. It's fueled by a firestorm of political outrage and accusations of market manipulation, highlighting the deep divisions within the American political landscape. Trump's abrupt decision to pause his planned tariffs on a wide range of imported goods, replacing them with a blanket 10% tariff, excluding China, which faces significantly higher levies, sent shockwaves through the financial world. While some lauded it as a masterstroke, others condemned it as reckless and potentially damaging. The initial reaction was a surge in stock prices, a testament to the market's relief from the looming trade war escalation. However, this euphoria proved short-lived. Thursday's decline underscores a growing unease, suggesting the market's initial optimism was premature and perhaps even misplaced. The market's muted response to positive news, the EU's suspension of retaliatory tariffs and cooling U.S. inflation, further emphasizes this underlying anxiety. A tale of two interpretations: art of the deal versus reckless gamble. Republicans, echoing Trump's self-proclaimed art of the deal strategy, hailed the tariff maneuver as a shrewd negotiation tactic. Bill Ackman, a billionaire hedge fund manager and Trump supporter, lauded the move as brilliantly executed, a textbook example of strategic maneuvering. This perspective portrays Trump as a skilled negotiator, capable of using unexpected moves to achieve favorable outcomes. However, this rosy interpretation is sharply contradicted by the Democratic Party. Democrats express outrage, viewing the sudden policy shift as reckless and potentially harmful to the American economy. They cite the market's volatility as evidence of the administration's erratic approach to trade policy. Senator Chuck Schumer, the Senate Minority Leader, criticized Trump's actions, stating, "He thinks he's playing red light, green light with the economy, but it is very real for American families." The economic consequences are far from clear-cut. While the initial 10% tariff might seem less harsh than the previously announced rates, experts point out that the effective tariff rate is significantly higher, particularly when considering the steep tariffs imposed on Chinese goods. Diane Swank, KPMG's chief economist, highlighted that the effective rate now peaks at a staggering 30.5%, exceeding even the worst-case scenarios projected before Trump's announcement. This highlights the complexity of the situation and the potential for unintended consequences. The possibility of goods being rerouted through intermediary countries adds another layer of complexity to the already intricate situation. Accusations of market manipulation and insider trading. The controversy extends beyond the economic realm, delving into allegations of market manipulation and insider trading. Democrats have voiced serious concerns, suggesting that the administration's erratic policy changes provide opportunities for those with privileged information to profit at the expense of ordinary investors. Senator Adam Schiff has called for a full investigation into whether anyone within the administration leaked information about the impending tariff shift, allowing them to buy or sell stocks before the public announcement. He emphasized the public's right to know if any such actions took place. Representative Alexandria Ocasio-Cortez echoed these concerns, urging members of Congress who engaged in stock transactions in the preceding days to disclose their activities. This underscores the growing suspicion that the abrupt policy changes were exploited for personal gain, fueling the already intense political backlash. House Whip Katherine Clark directly accused the administration of corruption, highlighting that Trump had explicitly advised his paid Truth Social subscribers to buy stocks just hours before the tariff announcement. This allegation raises serious questions about the integrity of the administration's actions and the potential for abuse of power. The gravity of these accusations cannot be overstated. The potential for insider trading, especially on such a significant policy shift, undermines public trust in the market and erodes faith in the fairness and integrity of the financial system. The investigation demanded by Senator Schiff is crucial to uncovering the truth and ensuring accountability. A market in limbo, uncertainty and anxiety reign supreme. The market's current state reflects a deep-seated uncertainty and anxiety. The rapid shifts in trade policy, coupled with accusations of political maneuvering and potential illegalities, have created a climate of fear and unpredictability. The initial relief at the tariff pause has given way to concerns about the long-term economic consequences and the integrity of the political process. This situation underscores the profound interconnection between politics and economics. Trump's actions demonstrate how political decisions can have immediate and far-reaching consequences on financial markets, impacting investors, businesses, and ultimately, the average American family. The coming days and weeks will be crucial in determining the long-term fallout from this latest episode of trade war drama. The ongoing investigations into potential market manipulation will play a significant role in shaping public perception and influencing investor confidence. The economic consequences of the new tariff structure remain to be seen, adding further uncertainty to an already volatile situation. The story of Trump's tariff turmoil is far from over, and its unfolding chapters will continue to dominate headlines and shape the political and economic landscape of the United States.